the last couple of weeks, the banks had become real dogs. And since the financials are the second largest component of the S&P 500, when they do poorly, it's difficult for the broader stock market to act well. But then earnings season starts, and suddenly, wonder of wonders, most of the banks are reporting pretty darn good quarters. Today, we started to hear from the regional banks, namely KeyCorp. That's K-E-Y for you home gamers, one that I've liked for a long time. So what did Key, a big regional player based in Cleveland with over 1,000 branches across nearly half the country, have to say? Well, this morning, Key reported a 2-cent earnings beat off a 24-cent basis with inline revenues and impressive 4% loan growth year over year, including an incredible 9% increase in commercial, financial, and agricultural loans. Meanwhile, Key's still cutting costs left and right. If we ever get a sustained uptick in interest rates, these guys will make a killing. Remember, that's how banks make money. They pay you next to nothing for your deposits and then lend that money out at a much higher rate. While we wait for an uptick in rates, though, KeyCorp is aggressively returning capital to shareholders. In this past quarter, they used up last year's $564 million buyback authorization. They got a new $542 million buyback authorization for 2014. Add them up, and that's equal to 9% of the company's market cap. Plus, the board is expected to boost Key's dividend to 26 cents a share annually sometime next month, part of the Fed-approved capital return plan, which would give the stock a 1.9% yield at these levels. Now, the stock's given us a 16% gain since we spoke to the CEO back in October. I think it still has more room to run. Let's check in with Beth Mooney, the chairman, president, and CEO of KeyCorp, to find out more about the quarter and where her company is headed. Ms. Mooney, welcome back to Mad Money.
Thank you, Jim. Glad to be back.
Well, Ms. Mooney, you got a tremendous 9% commercial industrial growth in loans. Where are those loans concentrated? Who's taking them?
It was one of the strengths of the quarter, and I will tell you that we are leading our peers in that regard. Our commercial lending is up 9% year over year and 4.5% linked. And generally, it's across the board. Our business model is winning with clients. But if I were going to look at sectors that are doing particularly well, I would say energy, healthcare, technology. But geographically, it's well dispersed, and it's been a strong quarter for us in lending.
You know, it turns out that I guess geographically, Key actually has a lot of overlap with what turned out to be the new oil and gas portion of this country.
It does, indeed. The energy sector, that the natural gas and the shale play, as we like to call it, is right in our backyard.
Okay, so let's go over what I think people always want to hear. Well, wait a second. They hear that if interest rates went higher, you can make more money. What rate is the optimal rate for shareholders to make the most money owning KeyCorp?
Well, I will tell you that any lift in the short end of the curve will be very, very good for banks, but particularly good for a bank like Key. With our large commercial lending book, 70% of those are variable rate loans, which are tied to 1-month LIBOR or prime rate. So as we get some lift in the short end of the curve, that is where you'll really start to see some momentum in our earnings and our revenue.
Okay, now one of the things that you mentioned, the commercial doing great, but you've got an impeccable home equity book. Average FICO score 760, 60% of the mix being first liens. I mean, what is it that you guys do right that the other guys aren't doing?
Good old-fashioned back-to-basics lending. Our home equity book is branch originated. They're customers of the bank. We make sure that they have strong credit, but it's also for a strong need. As you pointed out, 58% of them are first liens. So many of them act like a mortgage for our clients. We keep strong FICO scores, and we keep very low loan-to-value. So at the end of the day, it was a high-performing book through the crisis, and for us has been one of our most profitable consumer lending products.
Beth, let's look back for a second. In the 2006-2007 period, Key high dividend, Key very small, 400 million shares. I mean, is it reasonable to think that one day, given the fact that the country might be growing again, we could go back to that smaller share count and higher dividend?
Well, as you know, through the downturn, we all issued equity as part of our recapitalization plans in the financial downturn of 2008 and 2009, and then in 2010 as we all repaid our TARP obligations. So we do have a larger shareholder base. But what I think is important is where you started, is that we are successful in returning capital to our shareholders. Our second consecutive year through the CCAR process, the Key's been able to return peer-leading levels of capital to our shareholder in the form of dividends and share repurpose. And our investors find that very attractive, and it's one of the reasons many of them hold Key.
Oh, definitely. That's why we tell people to do it. M&A in the conference call comes up as being a bright spot. People don't think there's a lot of M&A going on in the country. Who are these companies? Who are they acquiring? Who are they merging with?
It's interesting because when we look at again, what uses for the commercial lending. It's not a lot of historical plant and equipment sort of lending or building of inventories. We find companies are finding ways to grow more inorganically. They're looking at buying products or capabilities or competitors as a way to grow. So yes, there is actually a fair amount of M&A dialogue as well as M&A activity going on. It's just on a smaller scale, but it's part of corporate America learning how to grow their business in a slow economic environment.
Well, excellent, Beth. I want to congratulate you on the best performance of any of the bank stocks that we follow. Great job for KeyCorp. That's Beth Mooney, Chairman and CEO of KeyCorp. Good to see you.
Thank you, and thank you for your support of Key.
Of course. This has been a big winner. It's going to stay a big winner. I would stay with KeyCorp. Stay with Cramer.